the last time when he came talking about the Fibonacci theory, how it's used in the market. Before we go into that, let's just look at have a general outlook for the market, how currencies have been trading since Monday. We know that Greece is still yet to get that deal. We've gotten comments from China this morning saying that they will support the Eurozone bailout fund, that's the EFSF, saying that they will continue to invest in European bonds to help support the economy.
Yeah, it's for me. I think Greece is really in a deep mess now because they've been unable to agree on how exactly they're going to go about the austerity measures. They have to cut extra 325 billion from their budget. And I think they are going to resolve at pushing this burden on the people of the economy. And that is why you are seeing the youth around causing a lot of riots, burning down buildings, because it's now getting quite a little bit difficult for you to live and survive in that kind of economy. So it's really going to be a tough one for them. But if China is coming to help and they can effectively integrate this into their plan, I'm sure they should be able to meet up the terms.
Okay, now, I know stocks have been in a seesaw since Monday because at some point we did get a deal. The Parliament members approved the new austerity measures and we saw stocks running. But now this morning, your finance ministers are saying that they want a written agreement.
The problem with the EU is that they want to be sure that by the time a new government is coming in, they will still be able to implement what they have agreed on. So when they have a written agreement, if the present Prime Minister is gone and the new one coming in a couple of weeks, then they have something to hold against them that you have agreed that you're going to implement all of these austerity measures. So irrespective of the change in the regime or the new government coming in, it's still expected to pay out. So if it is that difficult, why they should have signed it? But
we also did get a report this morning that the two leaders of the two major parties, the PASOK party led by George Papandreou and the New Democracy Party led by Anthony Samaras, that they will sign a written agreement.
They will, but if
not,
if they do, it's going to be a good news. Yeah, obviously, if they do, it's going to be good news because from that point, investors' confidence will be increased and you see them jumping back into the market. Okay,
now for currencies, let's talk about the impact on. That's what we're talking about.
The impact on currencies. Why this? It's good in the currency market is because right now a lot of traders have the choice of putting their money in euro or not. But why it's a little bit difficult for people in stocks is that some of them already have their investment in it. But right now, for the euro, the currency traders are on the sideline. If it's a good news, we're expecting that the euro is going to move up. And if it's going to move up, we're going to join a long trade. That is, we're going to buy the euro. So giving us potential profit for gain. But if, on the other hand, they decide that they're not going to sign or they're not going to agree to the austerity measures and the plan that the EU are proposing, then we should see the euro fall. So for the currency traders, you see them taking sell positions on the euro. So whichever way they agree, they don't agree, it's a good market for the currency traders. Okay,
I spoke with Michael on Monday and we talked about going forward, what to expect this week. We were actually hoping that since there was a parliamentary approval that the deal, the 130 billion euros will be handed out, perhaps by today. But, and I asked him how the euro had been faring. He actually did say that the euro had actually, been strengthening, surprisingly. So from Monday up until now, how has the euro performed?
From Monday up to now, there was a swift movement to the upside on Monday. That was on Monday, early Monday morning.
That was when Greece announced
from Monday till now, as we speak, the euro has been moving down.
Okay, so it's cautious trading on the part of investors. Investors are just waiting. Are they waiting for this
they are waiting
agreement,
for the deal.
The latest
we've been waiting for the deal for several months and several weeks now. Every week is going to be the final, every week is going to be final, and they keep postponing it. So it's a bad one. In fact, the EU, they don't trust the credibility of the leaders now. So, and that's a wrong signal to the investors. So that's why they keep pushing the euro down. They are selling the euro because they feel that if the euro default, then it's going to be a big problem.
Okay.
If Greece default, I mean,
in terms of currency spreads, because I know the euro is also paired with,
the euro is paired with dollars. Obviously, every other currencies, at least since Monday till now, most of these other currencies have been appreciating against the euro.
I know the dollar has been.
The dollar has been, pound has been.
Okay, so what would the fate of the euro be this week? Today is Wednesday, and we are meant to get that written agreement today, and there's going to be a teleconference of Eurozone finance ministers today. So perhaps if we get that written agreement and finally the Eurozone leaders agree to give out this money, where would we see the euro?
We'll see the euro moving up in the currency market.
So right now, as we speak, investors, are they taking position on the euro?
They are not taking positions, except the very aggressive one. They're already predicting the action.
What are they thinking will be the outcome?
Well, they are thinking that whichever way, the euro is not going to agree to a default. And from Thomson Reuters, we're saying that a default is not an option for the eurozone now. So a lot of investors see that whatever happens, the euro are going to agree to a form of bailout terms,
some form of rescue package for Greece. So if they have it at the back of their minds that no matter what, how high, the Eurozone ministers, whatever they scream or all the kind of demands they put out there, that they will still ensure that
reach an agreement. So
perhaps that's what's been giving the euro that strength we've been seeing, even in the face of all these challenges, because investors have at the back of their mind that no matter what, Greece will not be allowed to fail.
The way it works is that when in the market, if they give you a rumor of an up, traders rush towards it and they begin to act, because we are on the sideline, we are looking for a sign of light from the Eurozone. So if there's a shining light from the Eurozone that something positive is going to come in, investors almost immediately jump into it. But if, almost at the other hand, you now get a disappointing news, in the currency market, the same way you jump in is the same way you can jump out, without no bureaucracy, very fast. So for the currency traders, it's
unlike the equities market, you can cut your losses.
You can cut your losses, and the stock market is a little bit more difficult. But in the currencies market, it's very fast. If it's good, in. If it's bad, out. And
that's okay.
You don't have to hold your position.
Okay, let's go into what we're talking about today. We're looking again at the Fibonacci principle. What do you want to tell us this time from where Michael left up?
If we pick up from where we stopped at the euro. Now, the fact that the euro is going to get a bailout package, let's assume that they eventually get a bailout package, does not mean that the euro economy will automatically recover. You understand? Yes. So whatever is going to be happening, as far as I'm concerned, is still going to be very, very temporary. They're going to be seeing the effect on the long run. So for technical traders who apply Fibonacci tools in the study of the markets, especially if you are looking at the currency, the euro, US dollars now, we have three ways of analyzing. We have the people who are trading intraday, that is people who take their positions within the day, and we have swing traders who take their positions for several days, and a long-term trader who can be in the market for a long period of time, say 6 months to a year. So depending on the outlook, a trader can plot a Fibonacci retracement too. Now from the euro chart, from last year, I think towards October last year, in euro, the euro has been sliding down to the upside. Then early this year in January, we have seen a major correction back to the upside. Now the way the market works is that it swings either up or down. If it's going up, it swings up, it comes down, it swings up, it comes down.
A normal trend.
Yes, until it creates a trend up.
Okay.
And if it's coming down, it swings down, it comes up, it swings down, it comes up. Now, one of the decision we need to be able to make as a trader is to spot at what point these markets are going to retrace. We call them retracement, we call them reversals, we call them pullback. So the Fibonacci tool can help us to spot those retracement level. Now, from the euro dollar chart, which I believe we're going to get right now, on the 4 hours chart, what we see is that the euro has been trending up. Now, from the uptrend, there was a minor correction to the downside, and the price has retraced.
Okay, I believe that's what we're looking at.
Yeah, that's the euro
right
USD
now.
chart. From the peak, from below there, the euro USD chart has moved to that high, to the highest point, and the highest point is around the 1.33287, around that area. Now you see a correction, that is a pullback, much more recently, a pullback towards the 38.2 retracement level. Now that retracement level is a point where traders feel that if price has been moving in a prolonged direction for a particular period of time, then it's going to get to a point, a peak. Now we talked about profit taking, that is when traders have gotten to a certain level of profit and they feel
it's time to just retreat, take profit.
So
retreat.
a lot of profit taking has happened on euro because of what is happening presently, because we are not yet sure what is going to happen. So we saw the currencies market retracing towards the 38.2 level. At that 38.2 level, two things can happen. We can see price either come down or push up. But from what you are getting right now, when the price got to the 38.2 retracement level, it began to move back to the upside. So telling you that the correction of that movement up has been terminated around the 38.2 retracement level. So we should expect price move from the 38.2 retracement level towards the 23.2 retracement level back to the 100 points. So at that point, it helps traders to know where to take their position. So if...
That's applying the Fibonacci principle.
Yes. For instance, you are in a long trend. Price has been trending to the upside. Now, you don't expect to go and join a buy position from the top. The principle in business is that you buy at a low price and sell at a high price. Okay. So when price has gone to the upside, you wait for a price to take a retracement. If price has done 100% move to the upside, then we have a retracement of 23.6, 38.2, 50 to 60. So by consensus, a lot of traders think that when price retraces towards the 38.2 level, it will now continue its original movement back to the upside. So that is what we have seen on the Euro-USD chart.
Talking about continue, hold your thoughts for us. We will continue with this particular session. We're still talking about the Fibonacci tool at the currencies market, using it to predict, or at least, help maximizing profits when trading. We'll be talking about that when we return after this short break. Please join us again.
There's a new way to now invest that allows you to diversify your portfolio.
It's Forex, the global market for foreign currency trading. A market in which the world's leading currencies are traded 24 hours a day and 5 days a week.
Now, to take your Forex trading strategy beyond borders, Alpari is the platform of choice,
in which you can trade Forex with professional guidance until you become a seasoned trader.
Alpari also provides free training seminars for both beginning and seasoned Forex traders 4 times a week, explaining complicated things in a simple way to make Forex trading comprehensible to everyone.
Call us today on 01-821-8274 or 080-3457-3593 or email us at nigeria@alpari.org or visit www.alpari-forex.com and experience dependability and innovation in online Forex trading.
Welcome back. We're still talking Fibonacci. If you're wondering what that is, Bade is still here to talk more on that and how investors, or rather currencies traders, use that at the market to help maximize profits. Bade, we're talking about the Euro-USD. You're showing us some charts and explaining the charts of the Euro-USD currencies pair. You did say that it was in 3 phases.
Yeah. What we just looked at is the trade. We have, like I said, we have different kind of traders. Some traders are looking to take profit from the market on a daily basis. So we call them intraday traders. So intraday traders, they plot their Fibonacci from a much more lower time frame. So you're talking about maybe an hourly time frame or a 4-hour time frame, so that they can know where to take position in the market for a day. So the next kind of traders are the swing traders that are in the market for days and maybe run into weeks. So they look at the market from a different angle entirely. You'll be looking at maybe an higher time frame like the daily time frame or the weekly time frame. From the Euro-USD chart on the daily time frame, what you're going to see is this. Now, in the market, the first thing you want to understand is first, what is the sentiment of the market? Now, if the sentiment of the market is bearish, what you can see on that chart, we have a bearish sentiment on that chart. You can see that price has been trending down for a long time. That's from October until it hits that peak around December into early January. Okay. Now you can see a correction to the upside.
That's for February, coming into February now.
You see, you see the correction to the upside. Now it peaked around the 38.2 reversal retracement level. Now, at that retracement level, people who have taken a sell from the top of that move, that is from the beginning of that move down to that point, that was the first profit-taking level around January. So the buyers took the market towards the 38.2. From that 38.2, traders are now beginning to position themselves for another leg down for a sell. So from that point, a lot of traders have entered into a sell, hoping that it's going to target the 23.6 level, which is where the mouse is hovering. And if price successfully take out the 23.6 level, you will see it pull down towards the 0 point.
So what you're saying is traders know exactly when to pull back?
Yeah,
and exactly,
know,
is
yes.
it for those who know how to apply these particular principles or using similar tools?
Every trader has to know where the market is going to pull back. The problem traders have is they entered the market in the wrong time, because probably you are entering the market when the market is about to turn. Understand? If you entered, for instance, price has been coming down, you did not join the movement from the top. You are now taking your position from below, where price is about to turn back. So if you take a sell from below and price started turning back to the upside, you are the losing hand. So a tool like Fibonacci retracement level helps you to understand where price is going to peak. That is where it's going to stop. And from that point, how much is it going to retrace or pull back? Now, when it retraces or pull back, it now gives you another point where you can enter into the market. For instance, if we go back to that chart on Euro USD, I want to show you something there. Now, every trader who lost the movement, for instance, from October, any trader that was unable to take the sell trade down there has another opportunity around the 38.2, where the mouse is hovering, to take another sell trade. So you can now take a sell position towards the 23.6 or the 38.2. And if we go back to what is happening in the Eurozone now,
is that the only information driving the market for currencies traders?
Driving a currency like this.
Okay.
Currency like this is driving a currency like this. The euro, any currency that is attached to the euro now is being affected by the Eurozone. And excuse me, all the currencies are in one way or the other tied to one another, euro. Obviously. You understand? So obviously it's a news that is moving the market now, and a lot of traders are putting their air out with. Now, if the euro defaults,
that's the
a
worst case scenario.
Yes, the worst case scenario happen. You are going to see a swift movement from that 38.2 retracement level to the 23 and to the 0 level. I tell this can happen in a week or two.
Will that be just before the news hits the market, or right at the moment it hits the market? What about rumors? Because I know rumors usually fly around markets before it actually does hit the market. So, do you think investors, even at that point, can begin to stage a pullback, as it were, even before the news hits the market?
Yeah, rumors come into the market, but the effect that rumor is going to have is not going to be as hefty as
when it actually does hit the market.
Because by the time it hits the market, a rumor, very few people or few sets of people get information about it. But when it hits the market, you can see it on the internet, on Bloomberg, on Thomson Reuters, and everybody begins to act. So at that point, if it's a negative news for them, you see it pull back. But if it's a positive news from that 38.2 level retracement, you see price do a further movement to the upside. So from that 38.2, if it's a positive news, you see price push up towards the 50 retracement level. So at that point, a trader can now know that I can trade from 38.2 towards the 50 level. At that point, you know your boundaries for trading. A lot of time, why traders lose money or investors lose money is because they don't know the right time to get into the market and the right time to get out of the market. Now, a tool like Fibonacci can help you to plan your exit strategy. It can help you to implement strict money management principles into your trading. For instance, traders who have taken a sell position from that 38.2 level, they have their stops above that point. That is, should in case market does not continue to the downside, if it goes a little bit above that level, they can take out their losses and plan another trade. At least that's the peculiarity of the foreign exchange market. It's quite difficult for the stocks guys to do this kind of thing, because we can move in and out.
All right, Badi, let's say I'm a currencies trader now. I've heard all that you've said, and I haven't been using this Fibonacci, but I have been trading at the market. I've had my fair share of losses and gains in the course of trading. So I come to Alpari. How long do I need to learn this?
The principle of Fibonacci can be learned in a day. But now,
what about practice?
Practice it is now a function of the individual, because You have a lot of videos. We make available videos.
Okay.
We
Self-help videos.
Yeah, but we are going to teach you to understand these tools. But for you to now understand it, you now need to watch, use it in your trading, apply it, and watch other traders make use of it. And the internet is there. You can learn how this works in a real-time basis. So any trader who does not have an understanding of Fibonacci can come into our office. We take them on Fibonacci. We are doing our advanced training very soon, which we are putting out free for some traders to come in, to come learn. So it's a good advantage. I think from next week we are going to be organizing free advanced training for traders. So from that point you can actually take advantage of the opportunity. And it's another thing to read it, but it's another thing to know how to implement it, which we're also going to show you, but we cannot be with you.
It's just hands-on practical lessons.
Hands-on practical. It's very practical. It's very practical to learn.
Okay, interesting. Yeah. We're almost completely out of time now. Let's just look at a general market outlook for this week. I know we've talked a lot about Europe and all of that. Okay, but since Monday up till now, which of the currency has been most profitable to invest to currency traders?
I think
I would suspect that it will be the dollar, because I know that the dollar has rallied in the last couple of days.
For instance, I've taken a sell on. I took a sell on Euro USD since Monday. You understand? Because of the patterns we have seen and
you've made some
decent gains, quite decent gain. You know, our portfolio is up.
Would you care to tell us exactly how much you've made?
No,
you wouldn't tell us. Okay,
I will tell you.
I wouldn't put pressure.
Another one a lot of traders were looking out for was Japan.
The yen.
Yes. They posted a trade deficit, and this trade deficit has caused the Japanese yen to weaken. So if the Japanese yen is weak, it makes the other currency stronger. You understand? So for a couple of days now, if you look at the chart of the Japanese yen, you see that it has been every other currency has been appreciating against the Japanese yen. So it's the problem is this: you don't know for how long this fundamental event is going to control the market, which brings us back to the Fibonacci retracement. With the Fibonacci retracement level, you can do your projection as to where price is going to top or where it's going to bottom. So you know the best place to enter into the market and to exit out of the market. So after getting your sentiments, you put in your tools, and these tools helps you to achieve optimum results on your trading.
Okay, thank you so much, Badi. Very educating there on the Fibonacci theory. I've been talking to Badi Ajidan, a currencies analyst with Alpari, and we've been looking at the Fibonacci market analysis tool, helping you to hedge against risk or losses, and of course helping you to maximize gains at the market. Well, he did say that they will be having some classes soon, advanced classes for traders interested. So if you're a trader, you have been trading at the currencies market and you have not been applying this Fibonacci principle, which he says, as we have heard from him, and even Michael, who came on Monday, very, very useful for you as a tool at the currencies market. Visit Alpari, and of course they will teach you how to use it and maximize your profits at the market. We'll take another quick break now, and we'll be back.
There's a new way to now invest that allows you to diversify your portfolio.
It's Forex, the global market for foreign currency trading. A market in which the world's leading currencies are traded 24 hours a day and 5 days a week.
Now, to take your Forex trading strategy beyond borders, Alpari is the platform of choice,
in which you can trade Forex with professional guidance until you become a seasoned trader.
Alpari also provides free training seminars for both beginning and seasoned Forex traders 4 times a week, explaining complicated things in a simple way to make Forex trading comprehensible to everyone.
Call us today on 01-821-8274 or 080-3457-3593 or email us at nigeria@alpari.org or visit www.alpari-forex.com and experience dependability and innovation in online Forex trading.
Welcome back. Well, more earnings reports are still streaming in.